Today we want to talk about VAT registration and issuing of tax invoice. We have already established that in Section 6 of Act 870, 2013, that a person who is engaged in a taxable activity and is not registered for VAT shall register if, according to Section 5 of the same Act, taxable activity refers to supply of goods and services to another person for consideration. So you are supplying goods or services to another person for consideration. That is what we mean by taxable activity. At the end of any period of 12 months or less, the person made a taxable supply exceeding 200,000 cedis. So for the whole year, if the person made a taxable supply, which is about 200,000, then the person qualifies to pay VAT. At the end of any 3 months, the person made during the period a taxable supply exceeding 50,000 cedis, then the person qualifies to pay VAT. We have already established that. So we should know that. And that is what we call the threshold. So that is the VAT threshold. We have a situation where we have also established, in Section 11, that there is some form of exemption, and basically is for promoters of public entertainment, auctioneers, national, regional, local, or other authorities or bodies shall also apply for VAT irrespective of their threshold or the amount of money or the amount of taxable activity that they supply. In Section 13, a person who is not registered, a person who is not required to register, may apply voluntarily to register by the Commissioner General. And so here we are talking about voluntary contribution. So a person who does not meet the threshold but still wants to register can register. And there is a condition, or there are conditions for that. According to Section 13, subsection 2 of Act 870, the Commissioner General shall not register a person if the Commissioner General is satisfied that the person has no fixed place of business or abode. So here we are talking about a situation where the person does not have a fixed place of business. If you don't have a place of business, the Commissioner General may or will not even register you. And the same Section 13, subsection 2, the Commissioner General shall not register a person if the Commissioner General is satisfied that the person may not keep proper accounting records related to the business. So here, if we have a situation, or if the Commissioner General thinks that the person does not have a place of business or a place of abode, or the person may not keep proper books of accounts or records, then the Commissioner General shall not register such a person. And when we continue 13BRI, then the person submits regular or reliable tax returns as may be required under this Act. So here we are registering you. If we are registering you, you will have to submit periodically. Normally 1 month, you have to supply a reliable tax returns to the Commissioner General. So these are some of the conditions that the Commissioner General will look at it before the Commissioner General may approve a person as somebody who can register for VAT. So here we have talked about keeping of proper books of account. So let's discuss this. One of the means by which one can keep proper proper books of account is by issuing tax invoice. And we pick that from section 41 of the same Act 870. Section 41, subsection 1. A taxable person shall, on making a taxable supply of goods or services, issue to the recipient a tax invoice in the form and with the details that are prescribed by the Commissioner General. So here, when we register you, you have to issue tax invoices to your customers. A taxable person, on issuing a tax invoice, shall retain a copy of the invoice in a subsequential identifying number order. So if we allow you, we'll give you some VAT invoice or tax invoices for you to issue to your customers. So when you are issuing the tax invoices, you need to keep a copy of the invoices that you have issued in a sequential order, because in future, when it comes to audit or when anything crops up, the duplicates will be referred to. So section 41(9), a person who issues, and this is where the issues are, a person who issues a false tax invoice or sales receipt. A. B. Uses a false taxpayer identification number. C. Fails to issue a tax invoice or sales receipt. So here, if you fail to issue them, fake or false tax identification number 10, and then you fail to issue the tax invoice, these situations, when you do them, then in addition to section 78, which section 58, which states that the person commits an offense and is liable to a summary conviction to a fine of not more than 100 penalty units or a term of imprisonment of not more than 6 months or both. So here there are conditions. If you don't issue them, if you issue a fake one, then this is what is going to apply to you. There is a penalty of either 100 penalty units, and one penalty unit is 12 cedis. So if you multiply the 12 by 100, it means that you have a penalty of 1,200 Ghana cedis, or it should not be more than 500 currency, not more than 500 currency points. So 500 currency points, and one currency unit is 1 Ghana cedi. So that becomes 500, or 3 times the amount of tax involved. So 3 times the amount of tax we are talking about. Whichever is higher among these 3 will be used in determining your tax liability for you, the taxpayer, to pay. So I think that these are very important, and we need to ensure that we pay our VAT, we file our returns, we issue our VAT invoices, so that these liabilities, we do not incur them. As usual, this program is sponsored by CAS Consult, a firm of chartered accountants and tax practitioners. I am Thomas Appiah, a chartered accountant, a tax consultant, or a chartered tax consultant, a researcher, and a teacher. Thank you.